Good evening, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is June 20th, 2013. Lots to talk about. Let's get started. All right. First of all, I do apologize for not being able to make a video this past weekend. I simply had lost my voice. I had a 102-degree fever on Saturday, and I just couldn't talk. I had a sore throat. My voice just completely disappeared. I just yesterday got my kind of got my voice a little bit back. Today is just a little bit better, so now I think I'm able to make this video. In fact, this would be a midweek video, and it just perfectly coincided with today's action, which is what I really want to talk about. And this is pretty much what I believe everybody else watching this video would want to see. Before I get started, I just want to make it clear that I'm still not long-term bearish and or bullish. I am just a regular trader, just like everybody else out there, who's trying to make a dime on the up move and the down move of the markets, of which, when I look at regular stocks, individual stocks, 90% of them are obviously going to follow the index that they're part of. All right, so let's get started. This is the chart of the SPY, which is the ETF that tracks the S&P 500. And we had a huge huge down day today. The day ending at a down day of the SPY of $4.05. That is a huge drop. We gapped down right under this 50 moving average. And just to let you know, anytime you gap below a major area of the chart, you can pretty much determine that it's going to extend. Now, I didn't think that it would have extended this much, but obviously it did. I did know, what am I trying to say? I was saying that all this time I would not play the bounces. You know, everybody would buy the dips. All of you know, all of you have been watching my videos. I wasn't opposed to buying the dips, but it just wasn't for me, because the risk was too high, simply because this move here was just an overextended move. I've been talking about that in all of my videos already. I've been talking about watching this 50 moving average over here. Okay, we would have to watch for a break of that 50 moving average. We had a break down of the 50 moving average over here, but ever since then, we've never had a break until today. Okay, in fact, today we got below the 50 moving average, and then we continued down. Where did we continue down? The low of today was 158.98. I have a level here at 158.62, which means that we should be in pretty good support already. However, this is 1-2 days down. We need a it would have been really good if, say, today we kind of went mid-range, and then Friday we continued down into the 158.62, and then I probably would have went long. Right now, do I think there's going to be a bounce tomorrow? That is definitely a possibility, and that's because we are into some support. What support levels are we looking at? We're looking at this this pivot point here. We're looking at this consolidation period over here. We're also looking at a break of the 50 moving average that's been holding up this whole time, and a break of this bottom trend line here that I had in place in all the previous videos. The trend line created by this pivot, and this pivot. Please bear with me on my voice right now. I'm still trying to get over this sickness. Hope you guys can just bear with me on that until at least this weekend's video, where my voice should hopefully clear up. In any case, we broke down from a lot of major support levels here, which is showing a lot of weakness in the market. That tells me that yes, we could have a bounce tomorrow, but I have to be cautious. Why? Well, first of all, before I jump into that, let me show you why I also think that we're in pretty good support. Switching to the hourly chart of the SPY, we have this pivot point here, which is what was indicated during the daily analysis, and that was the line that I just drew in the previous chart. And then we have two more pivot points here and a gap fill. Okay, so the cool part about this, it was really awesome as a day trade. Excuse me, we got that bounce on the gap fill for an intraday trade, but the markets were still very, very weak. It continued down and almost got to the 158.62 level. Okay, so this is why this area right here is a pretty good support level. I think right now everybody was just trying to get out of the markets. We're still in pretty good support level, so there is a chance that we may continue higher tomorrow. Not continue higher, get a bounce tomorrow. Okay, I don't think it's going to be a long-lived bounce, and I'll tell you why. And again, I'm not bearish or bullish, but I kept telling you guys that any trades that I take would be short trades. I'm going to ride the market higher, take a short trade in this area here. In fact, I'm still short the market. And then as I get stopped out break even, if the market goes higher, I'm not going to lie to you, I thought, the markets were going to turn over all the way down over here. Kept going up, I get stopped out break even, find the next resistance point, comes down, comes back up, stop spot break even. And then so on and so forth, waiting for that correction period. And I think that correction period has a good chance of happening now, unless the feds jump in and try to save it. The problem was, obviously, we all know that the government wants to stop printing money, or as much. Alright, so here's the reason. We have a high, and now we have a lower high. You know what? Let me just delete everything. Make it simple to see. Alright, we have a high and we have a lower high. Okay, we have a low. This, I really wouldn't really consider this move here too much as a pivot, but this move here would be a pivot. Okay, but no matter what, so we have a pivot here, so a high and a lower high. Now we have a low, right? No matter what, even if it bounces tomorrow, doesn't matter. If it continues down, doesn't matter. It's still gonna be a lower low, whether it's here or here or here, doesn't matter. This confirms a change in trend, at least just in the short term. I'm not saying that we couldn't get a bounce. We couldn't head down a little bit lower and then start heading higher. That's obviously a definite possibility. And like I've been saying in my previous videos, I think it's just going to be a correction. I don't think it's going to be a crash. Okay, so keep that in mind. Let me load my drawings back up. Alright, so we broke through this bottom support level here. I have two levels over here. Now, here's one thing I wanted to make mention. In my previous videos, I mentioned that the 165.8 level, 165.80 level was the last level in my mathematical formula. My mathematical formula that I invented last year in December, or was it 2 years ago? No, last year in December. Last year December, so it's a little over a year old. It's a very complex, complicated mathematical formula. But in this formula, it gives me a bunch of numbers that are going to be either support or resistance depending on how I make what numbers I input, right? That's what we've been seeing. That's what all these lines are for, and that's why all these lines have been working so well. Okay, the 165.80 level I did mention was going to be a very good resistance resistance level, or a significant level to look at. After we got that intraday pull back on the 165.80 and then we headed higher, I was like, that's it guys, I don't got any more levels, right? You guys can rewind and watch the other videos. That's exactly what I said. The 169.52, this level was created later without the same guarantee or level of odds in our favor as the 165.80 level. But as it turns out, the 165.80 level did hold up. This here was probably just, CNBC News and Goldman Sachs updating or upgrading the SPY, or the S&P 500 I should say. The very next day we come down, and then we never ever went back up to this level here again. Okay, the 165.80 level holds one more time here, two more times there, this candle here, this candle here. I mean, you can obviously see how significant this 165.80 level was. We come close to it again over here and then Wednesday and Thursday we went right into the 165.80 level again, and nothing. Okay, and I will tell you right now, to make a long story short, had we closed above the 165.80 level, I would have stopped out of my short with an in the money stop, meaning I would have been in the money. I would have stopped out because I would have expected the markets to go to 169.52. The markets did not go over the 165.80 level. It continued down, and then today it just slammed. It just bled out. It was a bloodbath today. Obviously, everybody can see that. Why do I think that there's a possibility that we could go lower? Let me show you. Alright, now I gave you the reasons why I think that we might get a bounce, a dead cat bounce. We may start consolidating bearishly before heading down lower. I mean, who knows? But I would not, like, I still have a lot of money. I would never invest all my money in one trade. So I still have money that I could actually initiate another short trade. But would I? No. After I saw this move here on higher volume, this is a reversal candle pattern right here alone. These two candles here, right into the 165.80 resistance level on high volume. I wanted to honestly take a short trade, but I didn't do that because it takes discipline, okay, and experience to know that that would have been a chasing method, and I don't really like to chase because I found myself in a lot of trouble every time I did, okay. And I did not take a short trade. Had I taken a short trade, I probably would have been very happy if I taken an additional short trade, I should say, because the market's just bled out today. Another thing you want to keep in mind is you see this symmetrical triangle here that I posted up on my Facebook, on the Facebook page. Let me just remove that line here, and then remove this bottom symmetrical, this bottom trend line. This is some symmetrical triangle here, right? Now we didn't break above the 20 moving average here, right? We broke above the 20 moving average here, and we did not pass the 165.80 level, right? Had we closed above this candle, the high of this candle, then I probably would have said that the high of the breakout would have ended up where the breakout would have been is right here up to the 169.52. You guys know how I calculate my measurements for triangles and trend lines and stuff like that, which what I'm about to show you is just gonna, we'll see if it happens or not. Anyways, so why do I think it's gonna continue down tomorrow? Not tomorrow, but continue down in general. Look at this volume. This volume is just ridiculous. This is the highest volume we've had this year. 321 million trades. This is not an exceptional, wow, you know, blow your mind kind of volume, because you know, before the recession, we were getting this kind of volume on a daily basis. So let's take a look at the last time we had this kind of volume. All right, let me just zoom out over here. Near all the way. Let's see, the last time we had this kind of volume is right here. This was May 18th. How much volume was this? About 247, maybe not. This was 11:30. Am I on it? 319. Here we go. Yeah. So this one is. So the last time we had this kind of volume was in the middle of May of last year. Okay, that is ridiculous. So, like anything, and like I've been telling you guys before, volume is very important. It validates the move, which means that this move has been validated. Now, of course, obviously, like I said in the beginning of this video, the Feds could step in and say, you know what, just kidding, we're going to continue QE 1 million and the markets will continue higher. But as pure technical analysis, as pure technical traders, we will see this as a change in trend on the daily chart, which means short term. Okay, not short term like a day trade, but as a swing trade, we can look at this as a short term. If we close below this area over here, then we can pretty much determine that it will be. All right. So after this move was made here, I got enough data to do a mathematical calculation, another sophisticated formula, spit out this number here, and you can tell because I made from where this line starts is when I calculated it. That way nobody can say, you know, the move was made first before I made the calculation. So that way everybody knows when I made these lines. Anyways, 154.77 is my next target. Does it mean it's gonna get there? No, obviously it's just, all it means is if it does get there, then I'm dumping all my shorts and I'm gonna go long. It's plain and simple. And when I say that, I mean for the market as well as individual stocks out there. If the market looks weak, I will hesitate to go long on any of the stocks out there. Okay, anything part of the SPY or the S&P 500, I will hesitate. Right? If the market looks bearish, then I would look for stocks to go short on or short the market itself. So if we get to the 154.77 level, I will initiate a fairly large amount of excuse me, I would initiate a large amount or my normal amount of shares on the long side at the 154.77 level. However, keep this in mind that if we do continue down tomorrow, if we do, and it's, I don't know, it'll be unlikely in my opinion because of the dead cat bounce theory, but mark my words, 157, this 157 flat, this 157 level, which was a very substantial level, right? We had 157. This 157 level was created all the way back in September 13th last year. Okay, rewind all the videos if you want. This line has never moved. We went right into, after the 157 was created, we went right into it, pulled back into it again, pulled back into it again, broke through. Okay, came back, is no longer significant, and it comes up all the way down, and now it will be considered support, right? It used to be resistance. So if we get into the 157 level tomorrow, I may take a small amount of long positions, and in addition to that, I'm going to sell 75% of my short sales of the SPY, which is the SDS long. Okay, did that make sense? I buy the SDS long, which is a 2-time short of the SPY. So if you want to short the SPY, you can initiate a short. That's fine. If you want to short the SPY times 2, then you buy the SDS long. Okay, so that's what I did. I bought the SDS long, so I'm holding shares on the long side for SDS. Now, if we get to the 157 level tomorrow, somehow we get that there. In fact, I probably would want a warning to be woken up. And a lot of you may not be able to watch this video, but tonight, because most of you, because of the time difference, most of you are probably already sleeping. But hopefully you can watch this video before the markets open tomorrow if you felt like you wanted to. So alright, so I just put my alert in there for 157.37 just to warn me if it ever gets that down that low. I personally don't know if it's going to get down there. Again, that'll be just my opinion. The charts are telling me there is a possibility because of this amount of volume. What you want to see in volume is a taper off of volume. You know, after a while, it continues in the direction that it's going, but the volume kind of tapers off. Then you see a large spike of volume again, and that's when you reverse the trade. That's when you know that there's going to be a reversal. Okay, so right now we're not tapering down, we're tapering up, if that's even a word. So basically that's telling me that we may consolidate and then move lower, because I don't see a reversal candle created yet, and it's not in any of my resistance points. Okay, but again, if that happens, that's fine. Let it consolidate. If it does build a consolidation pattern, then I may initiate even more short trades. It really depends on the situation, what's out there, what kind of stocks look good, what kind of patterns, and whatever. Or I may just sit back because I'm sitting pretty in cash right now, and this is the whole reason why it takes discipline to, while everybody's going long, right? Everybody's buying the dips, and that's fine. They're making a lot of money. That's great. But like I've been telling you in all these videos, when you have an extended move so high like that, you know, eventually it's going to come down, and when it does, it's going to come down hard. You know, I've been telling everybody, all my friends and everybody about this. If you're going to have this extended move without a correction, when it does come down, it's going to come down pretty hard and pretty sudden. And I don't want to be in a long trade when it happens. You know, people who went long over here at the 50 moving average, that's great, right? They thought it was probably going to break out of over here and make higher highs, and that's fine because that's what it's been doing back here. But now they're either stopped out or they're holding on because they think there's going to be a bounce. And like I said, there might be a bounce, but the charts aren't telling me that. The charts are saying that it has a good chance, or the markets have a good chance of going lower. And that's why I say, great, if the markets want to go higher, that's awesome. I don't care. I'm just going to short every single resistance point that appears. And if it stops me out break even, not a big deal. Because when that time comes, like the time today, when I shorted up here because of this resistance, now I'm sitting pretty all the way down here. All right. So I shorted it around, at the breakout. So it must have been at about 168, 168.60. and then right now we're at 159.40. So you can imagine the smile that I have on my face. And now I don't really have to worry. I have an in the money stop already in place. So no matter what the market does tomorrow or from this day on, I get stopped out break even on this specific trade. I have other trades out there in regular stocks. Obviously, those could go against me as well. But again, the discipline is what saves you from getting into trouble, such as the trouble that we had today. In fact, if you think about it, I bet you there's a lot of people on this candle here because of the volume too. Even though this was a reversal, a lot of people probably initiated long trades simply because they were buying the dip, right? This was a big move down. They buy the dip because they figured the Feds were going to save it and then close it above the 220 moving average. That didn't happen. So everybody was long in this area here, and then boom, we come down $4 today. So again, granted, we could get a bounce tomorrow, but the charts are saying that there's a good chance, or the odds are in the favor of a short-term bearish move. Now, this is what I wanted to show you. This is it's not necessarily cool, but this is what I wanted to show you. Let me get rid of this support line. Get rid of this line. I get rid of this line. All right. So the prediction, what is my prediction of how low that it could possibly go if it did? And if it did go this low, I'm going to tell you something. This is when I think the biggest bounce is going to happen. Okay. Again, I don't think, again, the markets are in trouble. It's just a correction. Like I said, it's healthy for the markets. The markets need to pull back. I've been saying that in many of my videos. I'm just going to draw a line here. And for those of you who are new just watching my videos, you'll notice that a lot of people, or 100% of those guys out there, probably don't do it this way. But I've done it this way, and everybody that's been old timers watching my videos have known for it to work pretty good. We have this bottom trend line here. This is not a triangle per se, but I think it's enough for me to determine that there is a possibility. Look at that. From the breakdown point straight into the 200 moving average. Now, as the markets come down, the 200 moving average will flatten out. Therefore, there is a possibility. Not saying it's going to happen because it's a long ways down if it does, but there is a possibility. If we confirm the close below the 50 moving average, that the 200 moving average looks pretty good. We haven't tagged the 200 moving average since last year. Okay, so keep that in mind. There is a possibility, and if we get into the 200 moving average, I may, like if we come straight down into the 200 moving average, I tell you, I will guarantee, I don't care how bearish the news is, I don't care how bearish everybody else on YouTube is, I'm taking a long trade at the 200. That's all I gotta say. Okay. Now, what should, or what am I gonna look for tomorrow? Simple. If we get into the 157 level, I'll take a short long position, for that consolidation period, and scoop up some, weekend money to take the wife out for a steak dinner or something like that. Short term, 1 day, 2 day trade kind of thing. Most important thing that you have to watch out for. We need to close below the low of today's. So we need to close below 158.98. Okay, that is key. If we don't close below that, then there's a chance that the markets can bounce even higher, fake everybody out, get everybody short on the markets, and then the Feds will just jump right in and start devaluing the dollar, forcing the markets higher. So just keep that in mind. This is not a guarantee. The charts are saying there's a good chance because we close below major support levels. We need to confirm it though, which means we need to close below today's low in order for that to be confirmed and not a fake out. Okay, so I just wanted to update you guys midweek. This is a midweek video. I will still, hopefully, if I feel good enough, make a video this weekend to update you on Friday's action. But pretty much this is what's going through my mind and what I'll be looking for. I figured I'd release a video today because tomorrow's action would be just as important as any other day. In addition to that, tomorrow would be the last day the options are tradable. It'll expire on Saturday. So like I said in my Facebook post, if you guys liked the Facebook page that I made, you guys would have been aware because I posted a screenshot there and I said, you know, options, this is the week that options will expire, so expect volatility. And I'm telling you, every time I said that so far making these videos, we've had a lot of volatility, and this week has been absolutely a great week for day trading. I day trade options. I don't swing trade options. And let me tell you, day trading options, especially in volatility like this, is just, you know, it feels very good. Puts money in your pocket, and it'll probably last me quite a while, especially after this week's action. In any case, you know, I don't want to make this sound like I'm bragging or anything. Like I said, I thought the markets were going to turn over around here. It didn't, and continued higher. But like I said, discipline. As the market gets more extended, you just want to look for shorts, not for longs. At least that's how I do it. I'm not saying that you have to do it. That's how I do it. And the reason I did that, and I've said it in my previous videos, is because in case something like this happens, then you know you won't be too unhappy. At least that's how it's been working for me. And I'm not going to say that I caught it because I didn't. All I'm saying is every time I short uh, a resistance point, I just wait till I get stopped out break even and then short the next one. And then eventually you're going to hit it where the correction takes place, like we are now. And you know, hopefully things go the way I expect it. But we shall see. You can never tell. The markets are unpredictable, and I'm a pure technical trader, so I don't listen to any of the garbage on the news. Even though maybe I should be, but I don't, and it keeps me out of trouble because it keeps my emotions out of my trading, and that has helped me a lot. Alright, thank you very much for watching. God bless to you all, and I hope to see you in the next video.